Why is the Hodges fund up 42% this year? And what stocks does Craig Hodges like now? I know a guy who can tell us. Craig Hodges. Hi, Craig.
Hey, Jack, how you doing?
Good. Thanks for being here. Now,
Glad to be here.
You specialize in smaller companies, mid caps, whatever, and they have done very well this year. The Russell 2000 is up something like 20%, but your fund is up twice as much. Everybody knows small companies have gotten a Trump bump since the election because they're domestic focused, and some of them pay higher taxes, and they might get a tax break down the road. Why was your fund doing so well even before the election? What's worked for you this year?
You know, a lot of the things that did not work the previous year, like a lot of the industrial names or commodity types like the U.S. Steels and Freeport-McMoRans of the world, those have been on fire this year, so that's helped. We also have a nice exposure to energy, and energy has been a benefit this year with the price of oil going up. And then we at the Hodges funds, we love industries that have very high barriers of entry, like the cement business, the steel business, the corrugated paper, and we've had stocks in those businesses really help out overall. You know, we're not concentrated. We've had pretty much a broad advance in our fund this year.
Okay, now we were talking earlier. You told me about 3 stocks. One where you see 30% upside, another with 50%, and a third that you think can double. We'll take all of them. Let's talk about the first one. It's Forterra, and the ticker there is FRTA, and this is a water business. What do you like about Forterra?
Water infrastructure, and with the new administration, we are going to see quite a bit of infrastructure spending. And we've done well in these type of businesses. I think we understand them pretty well. This is a new IPO that was not a very successful IPO. It has not participated with a lot of the Trump stocks that have run up. But these guys have a great management team. With infrastructure spending, there'll be a lot of water, pipes laid under the ground, drainage systems, which they dominate that area. And so this is a little bit of an underfollowed situation that I think really can play catch up from here.
Okay, moving to the 50% one. Gogo Wireless, this is a business that provides that Wi-Fi service. You said they do a lot for American, for Delta, so a lot of people probably use their Wi-Fi on planes, but it's got a heavy short position.
Correct. It's a very controversial stock. Has not done well. Stocks come from the 20s down into the single digits, around 9. I think it's finally time to start looking at this thing. They're spending a tremendous amount of money to build out their systems. The technology has not been all that successful before this. The new technology is much, much better. You're seeing insider buying. I think over the next 18 months or so, I think you could see this stock easily double. The fact that they could make tremendous money, but they're spending so much of it now on building out their infrastructure. But they've got a great market share. They've got about a 50% worldwide market share, about a 90% in private planes, and so it's a good business.
So even someone who doesn't own a stock might see better Wi-Fi service anyhow over the next couple of years, get something out of the deal.
Exactly.
The third one, I feel like I must have written something down wrong here. JCPenney.
I get that reaction a lot. Yeah.
You like JC? What do you like about JC?
They're in a tough business, of course, retail.
And you see a lot of upside here. You think the stock can maybe double?
They really, the old group did such a terrible job of wrecking the company that the new group, they have very low-hanging fruit to fix this thing. It's about a $10 stock. They'll do about $1 billion in EBITDA. We think about $1.7 billion in 2018. So that's probably $1.70 in earnings.
Even with all the competition from department stores and, of course, Amazon, what do they do to get people in the store now? What's working well?
Good question. They're doing some things. They brought these guys over from Home Depot. They're in the appliance business, which is a much, much better business from what they've taken out things they weren't doing well in. But they've got Sephora in half their locations, and that's driving traffic. And so JCPenney's really doesn't have to have a big increase in business. They can just more or less fix the things that were so wrong, and I think you'll get back to a $20 stock, a double from here.
You know what? You're the guy who's up 42% this year, so I guess I'm going to take your word for it. Thanks for talking these over with me, Craig.
My pleasure, Jack. Thank you.
Thanks for watching.